warriors. Let's have a great week. Summer's beginning in earnest, starting off pretty good for ForexAnalytix. For some of my forecasts are manifesting in front of my eyes. That's always a good way to start the summer. So it's a week of action in the markets, actions to lock in your prices before they go up next week, to become a subscriber of ForexAnalytix with this redesigned cutting edge technology, let alone the team. Okay, so also time to take action if you are not satisfied where you're trading. No law against having more than one account. I've been seeing that past Congress, although not much does. Hello, Dan. How are you? John, how you doing? So everyone, I recommend, if you weren't here Friday afternoon, especially if you're in Europe, that you replay the interview with Justin Hertzberg from Forest Park FX. So you're prepared for what's coming down in August. I believe it's ESMA. That's what it is, ESMA. There could be some changes. From Antwerp, Willem, nice to meet you. Never been there. Haven't been really anywhere lately. Hi, John. Okay, let's get to some of the markets here. I've been talking about the potential of a sharp correction in the S&Ps. Flirting again. Blake pointed out how we keep holding 2740, took it out again. Are we going to rally back and have, like with the euro rallying, maybe that'll take some of the pressure off the S&Ps? To me, it's just a question of when, not if, we close under 2740. And that's going to set the stage, I think, for at least, down here, 2625. With that happening, if you watch the week ahead video, Blake correctly diagnosed that the dollar would follow through with its weakness, and you had chances to buy the euro last night anywhere in here in the 40s. So if you heard his week ahead last night, you had a chance to have a nice lead. Great call, Blake. Blake's figuring up around here, 17 and a half, probably looking at this low. You could always go back and replay that. I think only people on the blog now are getting Blake's week ahead video. Was getting, I don't know, 900 views is the last one I see posted on our YouTube page. So that's happening in the dollar. And with that happening, I was talking to some traders this weekend. Every once in a while, the market says, get short anywhere. And, I feel that way about the yen. I talked about it. I said, so how about this for an attitude when you take a trade? Because a lot of us want to be perfect, because every once in a while we are. And then we delude ourselves that our timing is so great that we could have real tight stops and not let our trades breathe, and then we end up being right the market, wrong the trade. But how about approaching a trade like this? Like I said, sell the yen anywhere. This is where we opened last night. You could have gotten them off at the worst 90, something like that. Had a quick 50 pips there. But this is the attitude. And, I know that there are traders like Steve and Blake. We peace out, peace in. So why not approach a market once in a while and say, I just have to have a position on. That's what Blake did in Canada. He held his nose. I remember asking him about it. Canada had been, on the upswing for a while, but he had a weekly breakout. So he went with it. We're not always catching tops and bottoms, but here's an attitude. If you really have conviction about something, you just, put a third on and say, boy, I hope I'm early. Everyone with me? So that you could build your position to a full position, right? But at least you're there in case you don't get that reaction, that fib retracement, whatever you're looking for. Sometimes you just have to be in. Okay, so I think 109 is pretty doable here in the end. I have this low return line here. If I stretch it out, yeah, you know, down around here, 109. I just think this will be a rest stop, and we could be getting something pretty major here in the end. But why not at least 107? That would have equality, or 1.68 of this break. And you know where you're wrong now. I mean, everything over last week's highs, the market, the yen, then you're wrong. You have to get out of the way. And everyone knows my style. I'm a big believer in partial profits. So, if you took Blake's call in the euro last night, why not put a little in the bank? Tighten up your stop, no stress trade. That's where you want to get on every trade, no stress. Because, I don't care how detached you are, it's stressful. And I just want to wrap it with something that I don't pay attention to a lot, but I have been the last few months, and that would be Bitcoin. And I think enough people have been embarrassed trying to bottom pick this over the last, 6 months. It's bottomed. Oh, no, it hasn't. It's bottomed. Oh, no, it hasn't. So, all the guys on CNBC, yes, and some people saying the low of the cycles are in, people I've interviewed. I think they've been embarrassed and exhausted enough not to be trying it down here. And what's interesting about this, which makes it different from all other bottom pick tests, is that, do you think there were some stops here, guys, under the low that we made last February at 59.20? Give me a why if you think there was at least, one millennial who had a sell stop at 59.19 in Bitcoin. Okay, right under January's low. Okay, there was one millennial. Okay, now what happened yesterday is we took out that low and we're back above that low. So this compared to this, compared to this, compared to this, failing rally, failing rally, failing rally is different, because I think there's enough despair right now, and more importantly, the action of cleaning out the last stubborn bulls that were holding on for dear life, maybe until yesterday, and they let go for dear life. So I'd be looking at buying breaks. I think that we have a turn here. It may end up being, you never know how significant something can turn out to be until you do it. Kind of like a little 1, 2, 3 as well down here. Here's 1, here's 2, here's 3. Diverged pretty good even with that slam that we had on Friday. So most of the other major cryptos look a lot like it. In fact, Ethereum is not making a new low, right? Look at this. So I've been talking about this, especially when I interview crypto guys. I've been asking them, is there a shift of money flow, more money flow going into Ethereum because it's holding up well? I've seen articles that volume's expanding, it's taking away some of the volume from Bitcoin. So even a stronger, you want to buy the relative strength. So I would rank Ethereum the strongest, followed by Bitcoin, and the weak sister so far has been Litecoin. So if you're long a lot of Litecoin, you're probably feeling a little bit heavy. Okay, so I remember when Nicola was with us, and first time she brought up Litecoin, and I said, does that have less calories than Bitcoin? Well, now it does. Okay, a lot less calories, lost a lot of weight in the last 6-8 months. So with that being said, great look at the week ahead video, Blake. Nice calls. How are you today, buddy?
Hey, good morning, Dale. How are you?
Good morning. I'm great. In fact, you know what, Blake? I'm as brilliant as a diamond. You better put on your shades.
Oh, Christ. Here we go. There we go.
Go ahead. I'm looking forward to interrupting everybody this week. So go
Awesome.
ahead.
Awesome. You know, I'll tell you, Dale, I'm a little bummed out that you know, we start off the week. Things, you know, you think it's going to be an exciting week. You know, we had some news over the weekend where it looks like you know, the Trump administration is going to limit what China can invest in, and you know, the headlines came in hot and heavy. S&Ps came down under, you know, some pressure, you know, as soon as we open. And again, it's summer, so we got limited follow through. I shorted the dollar yen last night, and I got the headline late. I was I don't know what I was doing, but I wasn't paying attention to the headlines. And I got an email on my phone from JP Morgan. It was like, you know, it was outlining the headline, and the dollar yen had already slumped from basically 109.90 down to 109.60, and I'm like, oh man, that's a big headline. I shorted the dollar yen at 109.63, and I put in my stop above 110.25. So basically, here, I'll draw it out for you guys. I put in my stop here, right? I put in my limit way down here, and I went to bed overnight. And I woke up, and we were basically where I was at when I went to bed. And I closed it out this morning, and I closed it out for like, I don't know, 12 pips or something ridiculous. And, well, actually, I shouldn't say ridiculous, because I actually I'm got out at a better price than we are right now. And I told the guys and gals in the ForexAnalytix chat room, I said, you know, hey, I was, you know, short the dollar yen at 62, 63, and I just closed it out, just took my profits because we had no follow through. And as soon as I said that, not, you know, a few minutes later, we you know, spiked up towards 65, and but it's kind of like, if we're not getting any follow through, it's summer month trading, and you got to really adhere to the unsaid rules of summer trading. You know, you got to just take it when you get it, because if there's no follow through, there's probably going to be no follow through, is the way I'm looking at it.
You know, Blake, and also these moves last week too are emanating from Asia, which again is unusual. All the big actions happening, you know, I don't know, about 5, 6 o'clock my time in Asia. That move in the end was Asia. Last week it broke in Asia. So that too is, you know, probably part of the summer doldrums if you have to look to Asia to find a range.
Yeah, well, we have
don't they watch soccer?
A lot of headlines come out. Yeah, right. A lot of headlines come out. It seems like in the evenings, and so that affects the Asian trade, and then we have very limited follow through in Europe and obviously here in North American trade. So it's frustrating. It's summer. I never expect a whole lot. You gotta trade the extremes. I'm a little miffed about the cable this morning. I actually had a bid. You can see it right here. I had a bid right there. I canceled it at 132.17. That didn't get filled. I had it right here, and we got down to 22. And then obviously the cable's ripping now, because, you know, my 2 cents about the pound is the pound's actually going higher. I was expecting this. I was expecting from here, I was expecting to dip and then rip. So we dipped, just not as far as I was hoping that we dip, and now we're ripping, and the cable looks like it's going higher. I mean, the pound, you know, looks like the pound. By the way, just so you guys know, we are headed to this is a downtrend line, and so we get above 133.15. I think this is going to open up some upside here in the cable, and the euro is actually hitting new highs as we speak. Matter of fact, I've been looking at the euro rallying to 117.20 right here, which is the 618.
Yeah, almost there, buddy. The great call. So then again, you really were given the edge, even if you weren't a subscriber. But Blake, are these week ahead videos only going to people on our list now, and they're not showing up on the YouTube page?
No, they should be on the YouTube page.
Because the last one that's up on the YouTube page is like, I think 2 months old or something. If I could be wrong, but you know, I went there to check and I didn't see the recent ones. So just, but anyway, I mean, there's a nice free call that, you know, people got, whether they were subscribers or not.
Yeah, I don't know.
Hey guys, I just checked and it is on YouTube. Yes, so they are.
It
on
is?
YouTube. Yeah.
Huh.
Yeah.
Okay. Oh, okay. False alarm.
Yeah.
All right. Okay. Good.
Yeah. I'm looking at next week's preview. You know,
the front screen doesn't have it, is what
the front screen doesn't have it. Yeah.
Yeah, it should be leading off. You know, some people may not be dumb enough like me not to search for it.
Yeah, and you know what? Dale is correct. Stelios, it needs to be on the yeah.
Yeah.
Okay.
If you click on the videos button, then it shows you all the videos with the latest one first. But you are right. It doesn't show it.
It should say right here.
Yeah. See, I'm not smart enough to do that, and I'm like a lot of the public. So now that we handled this, can I skip Wednesday's meeting?
Yes, there we go. Thank you, Dale.
All right, I know it should have been brought up then.
But you know, and I try to tweet it out to people too. You know, to all my followers on.
Oh, you
Twitter,
get we all retweet it. Yeah.
Yeah, we try to get it out there, but yeah, you're correct, Dale. It should be showing up there, and I'm not sure why it is not. So we'll make sure that gets handled. So you know, I think one of the key components of like I want to say today, or really more summer trading, is really targeted trading. Meaning, what I try to do when I'm analyzing the market is I try to envision where I think things are going to go. All right, doesn't mean I'm going to be right. It doesn't mean, you know, that I'm right all the time, because I'm sure as hell not. But I try to imagine where I think things are going to go, and if I think they're going to go there, and I'm like, okay, I want to buy. Let's say, for example, this is a great example with the euro dollar. You know, I want to sell the euro when it gets to 117.20. Well, what that means is I'm only going to sell it if it gets to 117.20. If it doesn't get to 117.20, I'm going to miss the trade. And I try to envision things like that, like dollar Canadian. I want to be a buyer when we drop down to 132, and then I want to buy more if we get to 131. Great. That means that if it gets to 132, I'm going to be a buyer, and if it gets to 131, I'm going to buy more, and then I'm not doing anything until then, because you're going to get whipped around in this in this lack of volatility. Because what happens, like during the normal part of the year, non-summer, let's say non-summer trading, just regular trading sessions, you get enough volatility where you can say, okay, well, I think the U.S. dollar Canadian is going to get down here to 130, let's say 132. So I might be buying a little bit in the meantime while I'm waiting for it, but I got enough up and down volatility where I can, you know, I can scalp it for 10 pips here, scalp it for 20 pips there while I'm waiting for that to happen. And you might be able to do it in the summer as well, but it's going to be a little bit more difficult. So I practice a lot of targeted, disciplined trading in the summertime, and it's difficult, especially when you're used to dealing with more volatility, and you can you know you can be wrong. You can be wrong a little bit from time to time, and still make out okay because there's enough volatility. So, you know, like, you know, I'll just go through some of these majors and what I'm expecting. Yeah, I'm expecting the euro to get back to 117.20. If it gets 117.20, I'm willing to short it up there because that is the 618. It's previous support after this double top. That should be a really nice pivot area for the euro dollar. And if it gets up there, I'm a seller. And if it doesn't get up there, then I'm probably just going to end up leaving it alone. The cable, now, one thing that I'm looking at with the cable is I think that this, resistance is going to be at 133.15. I am going to be a buyer if we do this. This is what has to happen for me to be a buyer. I need it to break out, come back and retest, and then I'm a buyer here at the retest, not necessarily a buyer right as it breaks out, because I'm a little worried that the dollar downside follow through is not going to happen. So I've got to let the pound actually make the move first versus the dollar, just assuming the dollar is going to weaken, because the dollar's already been weakening a little bit, but I don't know. Again, I'm not sure how much follow through we're going to get. I am looking for the dollar Canadian to dip. We had a really big reversal on Friday. We had a really big reversal on Friday, and we did not have, or at least at this point in time, have not had any follow through. Now, one of the reasons why the dollar Canadian hasn't followed through yet to the excuse me really quick. One of the reasons why the dollar Canadian hasn't fallen through to the downside is that with the news out of Canada, or excuse me, with the news, the Chinese news regarding the trade protectionism measures that we're going to take with China intellectual property, or intellectual property making its way to China, regarding robotics and everything else, people are just more worried about trade. So that kind of spooked anybody who was buying the Canadian on Friday, and they kind of reverse course today. So I still think the dollar Canadian is going to come down. Again, you have to be patient here. I think it's a situation where it's going to be a very tricky move. One of the other things that I do constantly think about Canada is they have a lot of problems. They have a lot of problems with loans. They have a lot of problems with very high real estate, slowing economy, slowing inflation that's not very strong. So there's a lot of things that I think that the Canadian currency is going to weaken unless there's a NAFTA deal, and right now that's to be seen. One of the other trades that I'm really watching here is the US dollar Mexican peso. I do want to buy the dollar peso. I think we're getting close to a level that I can be long. I haven't bought it yet, but I'm hoping for a move down to 1990, maybe even a little lower, maybe like 1970s, if we could get down here. The reason why is we have this the Mexican election next week, so I think that's going to cause some peso weakness. So I'm going to actually be buying into this dollar Mexican peso weakness. In other words, I'm going to short the Mexican peso on strength. So I think that we will continue lower a little further, but I want to be a buyer of the dollar peso probably when I think the dollar Canadian has bottomed out. It's going to be more of a dollar trade as well. So that's one of the things that I'm looking at here with the peso. And with the dollar yen, we broke this uptrend line, and we did this last night, and that's why I'm a little bummed out about the dollar yen, that we didn't see any follow through last night. I was thinking that the dollar yen was going to be well on its way towards 108 today, and when I woke up and the dollar yen was at the exact same price that it was when I went to bed, I'm a little discouraged that we're not going to get any downside follow through here. We have this, I alluded to it last night with a tweet that we have a possible triple top up here, but we'd have to get all the way down below here, which is 109.20, maybe 109.23. Let me double check what that price is again. I think it is 20. Yeah, 109.20. We really got to get below 109.20 to enact, this triple top, and it's a very messy one. It's not even a good one at that. But again, this is a situation where we're just having very limited follow through, and when we have when we're in summer trading and to top it off this summer with the World Cup, which by the way, I know for you guys or for myself in an hour and a half, I'm going to be watching the Russia, I believe it's Russia Uruguay, right? Is that the game that's on? I need Steve's help.
It is Russia, Uruguay, and Saudi Arabia, Egypt at the same time.
Yeah, I'm not watching that game. I'm watching the Russian game.
From this point on, because this is the last round of the group stage, you know, for nobody to have like an advantage, the last game of each group, the last two games of each group are played concurrently. So we will be having like two games at the same time from this point on until the group stage is over.
Okay, and that's probably what, another week or so?
There are 8 groups. No, it's 4. I think it's 4 days because there are 2 groups played each day.
Yes. Yes.
4 groups, so that's a 4-day process. Starts today and should finish by the end of Thursday.
See, and I'll tell you guys that you got all these. You know, you got the whole world is watching the World Cup, and we're in the middle of summer, and that really makes it for a very bad market in the FX market from a, you know, longer term.
But you can always make money from the World Cup.
There you go. There you go. Just betting on sports the whole time. But I guess the point I'm trying to make to everybody out there today, Steve and Stelios, and good morning, guys, is that
good morning, mate.
Targeting trading. That's a term that I'm just going to go ahead and use for now. Is just finding the places that you want to get in the market and waiting patiently for those levels. Because what you see on the charts here are levels that you want to buy or sell based on risk reward. For example, I know when the euro dollar gets to 117.20, I'm going to short it there. I may be wrong, I may be right, but I know that if I short it at 117.20, I can put in a, you know, probably a 20 pip stop, risk 20 pips to make 40. And that's the only thing that I can ask for, and the only thing that I really have control over in the markets is where do I enter and where do my stops go, you know, and that therefore defining my risk. So you have to be very very diligent about targeting trading or targeted trading in the summer months. So hopefully you guys learn a little bit from that, or maybe you take this as a little bit of a lesson for today in the summer months, because really that's what we've got to do. It's not it's something that I'm pretty diligent about in the summertime as it is, and this summer being that the World Cup is being played right now, because the World Cup's every 4 years, right, guys?
Absolutely, yeah.
So,
unfortunately, only every 4 years.
Yeah, and I think that the World Cup is probably, in as far as the currency world goes, it and maybe even the world is probably more watched than the Olympics. You know, I would venture to guess. So even the Olympics don't have this type of impact in the FX market. This is really World Cup is.
Definitely they don't. I mean, perhaps I don't know if it's even more people that watch the Olympics, but what matters, Blake, is that, you know, a lot of people will just watch something from the Olympics during that, like the 100-meter race, you know, and a few events like that. But, you know, the vast majority of people don't actually just sit in front of the TV for hours and watch the Olympics being played, you know what I mean?
Yeah, because I think betting is probably more prevalent in football matches, and therefore you take traders in the markets, they bet on everything.
Yeah, actually, probably you don't remember because we haven't discussed that in years. Probably Dale doesn't remember it as well because, you know, I had told him when he first had me for an interview years ago. But I started my trading career from trading actually football, soccer. I mean, soccer bets.
Yeah, no, I don't remember that.
Yeah. I was actually trading in Betfair because Betfair is the only one that has like a bid and an offer, so you can actually have a market. You can take both sides of the market. You can hedge your positions, etc. I was a student years ago, you know, in economics, etc. And I was actually making money trading, you know, as a hobby, trading football bets. And then my uncle who is like who was like the trader for decades, abroad, etc. He was like, you have an edge for that. Why don't you just start trading, the real markets? And I was like, yeah, sure, it sounded interesting. And he told me, I can show you. And that's how I actually switched
Oh, wow.
to FX. to FX and finance, yeah, because I was still actually a student in finance, so I hadn't still decided exactly what I wanted to do, and that's how it began.
Wow, that's interesting. That's interesting. Well, hopefully you can I wonder if you can't look at charts in when you're betting sports, can you?
Many people don't know that, but there are some platforms that you can actually attach to Betfair, because as I said, Betfair is the only the only broker actually that gives you a bid and an offer, so it lets you take both sides of the market. There are platforms that you have to pay outside. They don't, at least they didn't used to offer that. That even make charts for you, time decay, everything. I mean, you can actually approach the market in a very mathematical way.
Wow, so interesting.
Oh yeah, they have algos for that. I read an article about some guys. I think they were.
I have no doubt about that.
Bangkok, playing the horses somewhere in Asia that became multi-zillionaires, and he was a coder, and horse racing, very technical.
Wow.
Oh, yeah. Okay. So never been into that. Just
okay.
Football,
sports, well. Diverting this conversation, I'm gonna let you guys get into the some of the majors I didn't cover and some of the cross rates. So good luck today.
And Blake, you have any announcement to make before you leave?
Yeah, and guys, we are going to be increasing ForexAnalytix pricing starting tomorrow, Steve?
No.
No, they have a week.
You have a week.
Starting next Monday. Yeah.
Starting next Monday. So if you guys want to lock in the prices of what we have now, you got to do it this week. You will because we are going to be raising our prices. And tomorrow we'll go over the pricing structure for you all. But the bottom line is, if you guys subscribe now, you will be grandfathered in, and anybody who's using ForexAnalytix now obviously is grandfathered in as well. So, but for all new subscribers, we are raising prices next Monday. So, get involved today and utilize ForexAnalytix and download the apps. And our technology is far superior than anybody out there. Bottom line, and if you want to take advantage of all that we've done, then I would suggest that you do it now. All right. So so anyway, and tomorrow we'll go over the pricing. But remember, we are going to be raising prices next Monday. We're making some changes to the trial period. We're going to be removing the trial period starting tomorrow.
Starting tomorrow, yes.
Yeah, starting tomorrow until Monday. Because most of the people that have been listening in here, you guys have been, you guys have seen our platform in action. You already know what it is. We're going to be removing the trial starting tomorrow. So if you want to try it with a trial, then you got to do it like today. So good luck.
And the trial is going to come back next Monday, but then it's going to come back with the new pricing attached. And as Blake said, for those of you that are not familiar with the term, grandfathered in means that, if you capture the old prices as long as they're up, the old prices are going to be valid for your subscription for as long as you have an active subscription, even if that's a lifetime.
Yeah, and and just remember, if you've been using ForexAnalytix for a year, or you signed up annually last year and you're like, wow, I'm up for a new annual subscription, don't worry, your prices will be at the prices that you originally signed up as. So you don't have to worry about that. But I will recommend that you guys get in now, because if you don't get in now and you hesitate till next week, you're going to be paying the higher prices. And we have to do that because of all the development costs that we've incurred over the last, especially over the last several months that we've revamped the platform completely. So make sure you get involved, and thank you guys for all your support. For all of you that are current subscribers, we really appreciate it. You're what makes this machine tick. So thank you very much for your patronage and support. Okay.
And I think Blake, it's worth mentioning here as well that they also have an option. It's in our website. Do you want Forex Analytics for free, etc.? Learn more. We have the reinvestment program. Forest Park FX is the company we work with. Those of you that were here on Friday, you also heard Justin on the interview. You always have the ability to utilize that to discount even further your subscription to Forex Analytics.
Yep. Thank you very much, guys. Good luck today, and we'll talk to you soon.
You too, Blake. Great interview today, Michael Huddleston. I've interviewed a lot of people that he's taught.
Great.
Yeah. Okay. Good hunting, buddy. Hi, Steve.
You too.
I'm a soccer fan now. I've seen the lights. I watched it all weekend.
Yeah. Just the last comment about World Cup, and then we're going to go jump in the markets, of course. Free advice for anybody, and that's like worth, in perpetuity. Never bet against Germany. I even had this discussion with. I made this comment, Rosen Market. I don't know if you know him on Twitter. He thought that Germany is out of the game when they were back and scored, etc. I immediately tweeted him that never rule out Nationalmannschaft. It's the only team that can actually play or win until the very last second of the game, and that's exactly what happened. Is it never bet against the Germans, honestly, never ever.
Yeah, when Blake brought up that term grandfather, it makes me think of Shirley Temple in the movie Heidi, where she's looking for grandfather, where are you, grandfather?
I haven't seen that one. So
You're too old, my friend.
Or something else real old. Captain Kangaroo had grandfather clock. It was one of these big clocks, and it came to life. Grandfather clock. He flapped his eyes. Anyway, just reliving my childhood for a few minutes. That's all, guys. Thank you.
Okay, let's go through some chat. By the way, whatever questions we have, just put them in so I can answer them all. Let me say, I say question about the S&P. Let me say here that we've obviously seen like several days that risk is, let's say that it's off. But in all honesty, I still don't see the price action that would actually make me really worried. That risk is rolling over, right? I don't have any more a position in the S&P. I booked both my halves on my S&P long with a good profit, but I to be honest, I still don't see something really damaging. We are seeing.
How about a close under 2740 that it's held 1 million
Definitely,
times?
Definitely 2740 is the first strong area of support to watch. Definitely. 2740, unless we see a break below 2740, there's nothing even to discuss about, right?
Well, not that far away.
No, it's not that far away. But until then, you can even see this as another consolidation that may end up breaking high, right? Now, if we do break below 2740, I would be looking for 2690 afterwards before I actually start getting worried that that something else might be happening. And of course, momentum and structure are always important. It's not only about what kind of level you're going to break, but it is in what kind of fashion you're going to break that level. I have to say something though. Something that does matter and might point to some possibility of a bearish development here is the fact that RSI actually never made it to overbought levels in this move high, right? So the RSI structure does leave the possibility open that this move higher was actually not impulsive. And the price action also, as you see, to be very fair and honest, isn't that enticing. Like, just look at it, right? Price action not really that bullish. Although the fact that we've broken above this trend line is quite important, the fact that we have been in a multi-year uptrend is something that you should never ignore. So, you know, as I said, I took my profits being long in 2 different places. I'm not actually looking to rebuy as we speak, but on the other hand, I think it would be very premature to turn bearish. Now, let's have a brief look at other indices. One thing to pay attention to here is the fact that the Nasdaq actually finally broke above this ascending trend line. And I know that, you know, somebody can also see this alternatively as an ascending wedge, right, Coach? What do you think? What do you think about this? An ascending wedge within likely another ascending wedge. So this is a possibility for a bearish interpretation. Regardless, we would first need to get down to retest this ascending trend line and break below it before we can talk about more. Because until that happens, there is, of course, always the possibility that this is going to prove to be some kind of a corrective move before another bounce higher, perhaps to retest this trend line once again, right? So there is still another bullish interpretation, or at least another bullish leg that might come before we actually see a stronger move lower. Regardless, on Friday we did get a bearish development in the Nasdaq, and you know that's something to pay attention to. And you know the IWM hasn't actually reached the target that I had in mind, but it is showing some signs of weakness as well, and that's something else to pay attention to. And as we also wrote in the weekend analysis, and I think I said it on the webinar as well, and I know for a fact that Blake also wrote it in his Thursday's analysis, is the fact that the DAX has actually triggered a double top formation here. Let me draw it so it's very clear for you. Here is the double top. Here was the range's bottom, like, right, 12,600, and the top was 13,200 roughly. So this is roughly 600 handle range. And on Thursday, we broke below it, so we triggered it. On Friday, we came back, we retested this range's bottom as resistance, and today we're resuming lower. So simply put, the target, just the target of this double top, comes down at 12,000, right? Regardless, I would be looking a little bit higher, because a little bit higher here, roughly at 12,100, we have a confluence of supports. What kind of a confluence is that? It's a horizontal support resistance area, and most importantly, it's this ascending trend lines support, which, as you see, this ascending trend line has held the trend since February 2016. So I think that this is actually quite a significant area. There is a good chance that we're going to make it down there. And now the FTSE, one move lower, corrective move to this move lower, one more leg down. Theoretically speaking, a quality target should be at 7,482. We might actually make it there, right? So let's see.
You know, Steve, listening to you analyzing indices, it's like a deja vu. You know, you've quite rightly so, for weeks and months now. We've said that there could be reasons for things to turn and go risk off, but they're not manifesting yet. But the trend is still, for now, to the upside. And you're absolutely right. It's as I said before, we've got rising yields, we've got the quantitative easing going away, tightening in many central banks. So eventually, this whole thing is going to cause, or should cause, stocks to go down. But
yeah, I think it's a matter of time.
The trigger is not there yet, but yeah, I agree with you. It's going to come at some point. It's going to come simply because the main reason over the past few years of all this big rally, this huge rally in equities, has been, one of the main reasons has been zero rates in QE. And when you take that away, at some point it has to come back.
Yeah, absolutely. And not only that, Stelio, even simple gravity, even simply considering the fact that we've been in an astonishing uptrend, which you very well said that partly or mostly was fueled by very, very loose monetary conditions. At some point, the markets have to revert to the mean in a sense, even considering that the mean is some kind of an uptrend. But still, I mean, you know, it's overblown.
Something else,
and
something else to think about, guys. Since November 2016, on the election, November 9th, a lot of this has been called the Trump rally.
Yeah.
So rightly or wrongly, the Trump rally. So I think if there is a little confidence drop in Trump, and he's doing okay in the polls, but if things with Mueller come to a head or something this summer, I think that could shake the confidence of the market, of those participants who believe that the market's destiny is tied to Donald Trump's destiny.
Yeah, and I actually want to repeat something that Steve just said, because maybe some people didn't put enough importance on it. A return to the mean, which is a rising mean. You know, long term, I've said this before. I think stocks, stocks, I think, are going to keep going up forever. Or, you know, I mean forever, but you know what I mean, for decades. Simply because the quantity of money and credit and debt just keeps going up everywhere.
And inflation is going up. I mean, even if we take the distorted measure of inflation, because I strongly believe that inflation is not properly measured since years ago. I mean, we don't measure inflation the same way. And you know something, you don't need to consider this a conspiracy theory or whatever. Just use your own logic and tell me if you feel like the past decade or so has been a period that inflation has stayed below 2%.
Right.
Yeah, I mean, you know, if you're simply a consumer, you know that with the exception of some technological stuff that have run their cycle, and you know they've become a lot less expensive. I mean, I see the stupid TV example being used over and over again. Yeah, that you know, back in the days, a family could buy a TV by working X months, and it was that much expensive. Now you can buy a 50-inch flat TV, like with $200-300, whatever, and you know, etc. But
yeah, you know, Steve, it's pretty cramped trying to live inside my TV.
Yeah, exactly. But
and eat there too.
Yeah, exactly. Let's follow the same logic with TVs, with medical costs, with education costs, with rent, with food.
I go to the doctor through my TV.
Yeah, I mean, how many TVs are you going to buy per decade? 3, 4, 5, 6 TVs per decade. But how is there any day that you're not going to be eating? Is there any day that you're not going to be renting if you're actually living in a rent, etc., etc.? I mean, it's more than obvious. Is there anybody that actually has no need for you know, medical stuff at some point in their lives or for long periods in their lives, etc.? So you know, we all know that one way or another, you know, the measure of inflation is somewhat tweaked. Now we can't be sure how much, but even if we take that tweaked measure of inflation, right, still a 2% constant inflation is enough to get a long-term uptrend in asset valuations, right? Because still the value of money goes down on average every single year. So yes, there is no chance that you know, the long-term uptrend in stocks is not going to go on more or less forever, but obviously there are going to be periods that we're going to be having some huge sell-offs, like it happened.
Of course.
Exactly.
And it's a healthy thing to have as well. You know, a 25-30% correction after years and years of rallying is not, you know, it's not a bad thing in my opinion.
Absolutely, and probably if it would happen a little bit more often than it happens lately, it would only be 20-30%, because I really doubt that when we finally get these markets unraveling, it's only going to be a 30% move lower. I believe that we're going to have something bigger in our hands, but you know, we'll get to that when we get there. Yeah. Anyhow, we went over the vast majority of the indices. Let me show the Nikkei. Nothing has changed actually here. When we were retesting the 23,000 area, I said that, you know, this is the moment of truth. We either break above it and then, you know, we're on our way to test the highs, or we get rejected once again, in which case we're going to 22,000. Needless to say, if we do get to 22,000 and we break below it, we also trigger a double top formation here, in which case we should be looking for at least 21,000 in the Nikkei, if not lower, right? So 22,000, strong area of support, a break below it should extend for at least 1,000 points, which is exactly the target of the double bottom of the double top that we will have then in our hands. So I think we covered anything that has to do with risk, but let's have a look at oil, because crude actually gave us a very good example of what is sell the rumor, buy the news, because in this case it wasn't buy the rumor, sell the news. In this case it was sell the rumor, buy the news, because the market was actually expecting, and it had started discounting that we would get some production increases by the OPEC. And obviously the market was underwhelmed, but by what it got. Theoretically, it got something like 1 million barrels per day of output increase. But in effect, due to multiple factors, effectively, it's considered that that's going to add to the production something like 600,000 to 700,000 barrels per day. But the market thought that is, very underwhelming, and we definitely cannot ignore the daily candle that we got from there, right? Because this was a huge, huge update. If you remember, I was being very, very cautious with looking lower in crude. Once we hit this confluence of supports, I actually, besides having very limited time, I actually also didn't participate in the blog post we wrote about crude. And the reason I didn't was we were so close to support that I was very hesitant in actually, taking one side or another, because, I still believe that, of course it can extend lower. I mean, this was a huge uptrend, but on the other hand, being exactly in support, it was a tough call to make. And, seeing this reaction that we had on Friday after initially hesitantly rebounded from that confluence of supports obviously increases the chances that we're headed to new highs from here, in my opinion. Regardless, we're currently testing the 61.8 of the move lower. So, we should watch this level. I mean, we might get rejected. I mean, 61.8 is quite an important fib. But I have to tell you that, I cannot dismiss this huge candle that we had. And the move that we got from roughly 64 up to 69 within like a week, the vast majority of which happened on Friday. I just can't dismiss it. I mean, I would probably be looking that if we do deep down towards the 67 area, that area is going to act as support. And I'm tilted to believe that we might actually be headed to new highs from here, right? If I zoom out, you can see how important this area that we found support is. So, Stelios, from what I remember, also wrote in his macro part that he's bullish crude, and he thinks crude is going higher. I do agree. I did agree since the beginning. I mean, I'm certain we were going higher. I was just not certain how deep the correction would first be before we actually get higher. But as I said, what we saw on Friday increases the likelihood that this was the correction. Not certain yet, but quite increased the likelihood. Now, if we do consider the possibility that crude might be heading to new highs, that would definitely help the other position Stelios has, which is the USD NOK, because obviously crude higher means NOK higher, means USD NOK lower. I would still be quite careful here, but as we said plenty of days ago, there is the possibility of a nice head and shoulders formation. For that, though, to take place, we would need to see a move towards the 8 handle and a break below it. That would actually trigger a head and shoulders formation, which would target, quite lower levels. It would target at somewhere at these lows here, like somewhere below 770. I haven't measured it exactly, but it would target somewhere between, this low and that low there. So, that head and shoulders formation. So bottom line, a nice clean break of the 798 area, 797, somewhere there. I think it would trigger a very nice technical formation, and then we would be actually feeling much better in having more conviction in looking lower. Until then, I'm actually not involved in this market anymore after I close the rest of my position. Same deal with USD CAD, perhaps some more strength in the crude market might help USD CAD, produce some kind of a corrective move lower. Where would I be looking at if this very nice outside key reversal that we got on Friday actually gets confirmed and doesn't get immediately invalidated? I think the first area that we should be looking for is the 131.30 area, which was that high. And after that, I think we can be looking for the confluence of these supports at 130, because 130 is a horizontal level of support resistance. It would also be the retest of this broken trend line. So, I do see the possibility of a move lower in the USD CAD. Regardless, though, I think that this break higher is quite significant. So, I wouldn't be so easy to actually start looking for new lows in USD CAD. As long as we remain above 130, looking for an extension higher is probably, the place you want to be looking at. I mean, it's a higher probability, right? So these are the two levels to watch in this case. I think that Blake already spoke about USD yen. USD yen is attempting. I wrote on the weekend analysis actually that USD yen broke lower from an ascending wedge, then it corrected higher and created another ascending wedge, and it's breaking lower from that. What was missing here was an acceleration lower, and as long as the market doesn't accelerate lower, it kind of worries me. So I'm still looking for an acceleration lower to actually trust this move, in which case I would be looking for at least a retest of 108. Speaking of which, we can have a look at some of the yen crosses, and euro yen is one of them, still contained within this descending channel. I'm a little bit perplexed about euro yen, I have to be honest here, because on one hand we got an A, B, an A equals C in this ABC formation, and on the longer term this might prove to be corrective and then see another move higher. But on the other hand, I have to say that as long as this channel is holding, I would respect the possibility for a resumption to the downside. I was short the euro yen last month, and I made a very, very good, I made actually killing there. But I'm not looking to be involved anymore because, as I said, I don't have clear conviction yet from where we currently stand, right? I would probably be inclined to look for more weakness, but my conviction is definitely lower than it was, especially due to the shape of this recovery that we got from down here, right? Because this was looking to me like another leg lower that would actually accelerate and break this channel, in which case I would then have high conviction that this is a strong move to the downside that is now unfolding, that has a lot more to run. But the nature of this recovery and the fact that we remain in this channel, hold me back. We had some questions about the crosses, so let me also show the crosses since I'm here. Euros. Oh, okay. Then I have to be very brief. Let me see. Let's see what we can cover. Okay, very fast. Eurozee, once again, this is like the fourth time testing resistance once again at 157.70. I'm still not convinced that the move lower is done. So I think there is potentially more downside. I have another question about EuroCAD. EuroCAD breaking above this ascending trend line that was holding the uptrend. Complicates things once again, but still this move higher might produce one more leg to the downside. So I wouldn't dismiss the possibility that there is one leg missing to the downside here as well. Also pay attention to the RSI. In this case, you wouldn't really want the RSI going above 70. And let me see, I had more questions. Oh, metals. Yeah, metals. So gold still holding within this descending channel. I would need a lot more evidence to actually start looking higher. So, still be careful here. Silver, holding support, but nothing to do as long as we remain. You can see how long-term this triangle, this symmetrical triangle has been. So just keep monitoring it and respect the breakout whenever it happens, because I do believe that a market that has been coiling for so long, once it actually breaks out, it should produce some very, very considerable follow-through. Platinum is once again attempting to rebound from this confluence of supports. Actually, Friday produced a very, very nice key reversal. So far today, we're paring back the gains from Friday, but do respect Friday's low, because if Friday's low does hold, that's a first bullish step. But, as I said, Friday's low has to hold. Anything else than that, it remains, very weak and very bearish. Palladium, I had already warned about Palladium that, a break below this ascending channel is actually going to point to that was supposed to be there. It's going to point to further losses. Okay, so be a little bit careful here, especially since we're getting very, very close to retesting this ascending trend line. You can see how important this trend line has been. So bulls really want to hold this level, because if they don't, things will start trickling down following that. Okay, the rest of the questions we have to take care of tomorrow. Enjoy the interview, Dale.
Thank you, Steve. Hello, Michael. Thank you so much for returning here to face. I'm passing you the controls now, my trading warrior brother. Just waiting to hear your voice, see your setups in here, see your screen.
Can you guys hear me?
There we go. There we go. Got it, Michael. How are you?
I'm doing well, sir. How are you?
Good. Thanks so much for coming back. Your reputation precedes you. One of your fans commented in here, "When's Michael coming on? You guys are boring." So, so a lot of love out there for you. You set such a high bar for amateurs like me. That it's great to have you on my reality TV show. So, also, Michael, I interviewed quite a few people that acknowledge that they learned a lot that has helped them in the markets from you. So, it's always interesting when, during interviews I ask, who influences you or who did, and your name comes up. So you've been paying it forward for a while to a lot of people. So great mission, man.
Thank you. Appreciate that.
Okay, so let's get to the Dixie. And I wanted to start off with this question because I forgot who it was. I think it may have been Crypto Cred. Talks about how I said Michael likes to look for where the liquidity is, and he said, yeah, where the orders are. How do you know where the orders are, buddy?
That's one of the hardest questions to answer in like one sitting, because there's a lot of things to study, and it's not. I'm not trying to veil it or like dangle it with a carrot or anything like that, but yeah, there's some things, and you're not a young guy like me. I mean, we've been around for a while, and there's a lot of things you have to learn about the markets and yourself, and you have to lose a lot of money apparently to learn the most important lessons. The things that I think that are paramount to understand where liquidity is, well, there's a few of them in this chart where I'm going to talk about today, but
okay,
if I can just get right into it, it'll help me answer that.
All right, buddy.
But the last time we spoke was in February. I mentioned that there would be some measure of a move above this high, and your listeners and such can go back and look at that.
Yeah, I remember you were bullish a euro, and it popped pretty good, a couple of days after the broadcast.
Well, there's two specific. There's a lot more different reference points in terms of defining liquidity, but there's two that I like to teach initially because they're easy to see for a retail trader, for someone that's like a neophyte, don't have a lot of experience with starting. The one that I like to teach is the equal highs and the double bottoms, okay, because retail traders are indoctrinated to think that these are support and resistance And they may appear so initially, but large institutions will target them at a later time. Now, the variable is going to be an unknown. I don't know how much time is going to be between where the market is and where it's going to go to these points of liquidity. And I'll draw out one right now. If you look at these highs here, okay, there's equal highs. People that have been following me for months now know that my eye has been set on this area right in here. Now, specifically, there's a price point right above those that is proprietary, but you don't need to know that. You don't have to be so precise. But whenever we see equal highs, okay, or equal lows, that to me is like a big billboard sign, flashing neon sign, like there's stops above these highs, and equal lows, there's obviously sell stops below those.
Right.
If you go back and look at price action, and it doesn't matter what time frame you use, it's universal because everything in price is fractal. If you look at periods where there are clear, discernible equal highs and equal lows, invariably the market will go back to those reference points and sweep them to some degree. There's a benefit in studying this because not only do you understand where the market's most likely going to go next, because the market always seeks the side of the marketplace that has not been traded as efficiently. Okay, and last time we spoke, I kind of delved into what inefficiencies are.
Does that kind of go along with, Michael, like, you know, my expression that the market will shake out as many participants as possible before the move they're looking for happens, then most likely without them?
Absolutely.
Okay.
The market's not an ATM machine. They're going to take your order if it's available, and they'll unseat you and take your seat, and then the move will take place. Okay. Retail traders generally will not have the moxie to get back in if they are knocked out, and it's like it feeds on itself. It's trader psychology. No one likes to get stung twice, so it's hard for a trader to understand this. And the best way to teach yourself is go back and look at price action in the past, look at equal highs and equal lows, and see how price sweeps them. You'll get a lot of insight based on the mechanics of what price does after it runs these levels. For instance, I've been mentioning for months now that we're going to go up to this level here. We've done so. We've swept it. Now, obviously, this is marked for end of day data, and we've gone just a little bit lower than the candles shown here. And I'll give you my prognostication, what I think may happen going forward. But for now, just notice that we swept it 3 candles and went above it. This one here, we rejected that.
Right.
That in itself is what I try to teach neophytes in the beginning, because when price is down here or down here or down here, this is going to be a magnet for price. This is like the question is where's the market going? And I always make fun of the pundits will say, we can't time the market. Well, we do it all the time, every week. It's pretty much consistent. I'm not always right, but if you look at price like I'm explaining it here, on a higher time frame like a daily, it removes all of that uncertainty and vagueness that permeates the marketplace in terms of education. We'll throw a whole list of indicators on the chart, and you can't even see price. What I like to do is look for where the orders would be residing. Now, when I ask myself internally, where's the buy stops, where's the sell stops, I'm not asking that in a sense where am I going to hurt myself as a trader. What I'm looking at is where's
the market going?
Exactly. And I teach that as the draw. It's a draw on liquidity. And if you do that on a daily chart, generally you're going to have your bearings in the right direction. Now, the hard part is getting caught up in the short-term volatility of intraday trading. You look at a 5-minute chart, and any one of these days here that is a down closed candle could have very easily talked the trader out of expecting the market to reach to here. So you have to develop a certain measure of conviction, and you only teach yourself that from experience. And no one can transpose that from, like you've been around for a long time. I've been around for a number of years. We can't just take what we know as routine things and submission to things that we've learned over experience. We can't place that in other traders.
It takes time, the tincture of time, right? I mean, and in our business, it's screen time, right, Michael? I mean, you can't learn experience. You have to put in the time.
Right. You can't do it from books. You can't do it from watching a video. You have to put yourself in front of the charts and study it. But that's one of the easiest things for me to outline to someone that doesn't have a lot of experience. And even folks that have been trading for a long time, once they understand this principle, it's good. Price moves based on its seeking of liquidity, because the market's not moving on an indicator based. It has no respect of your trend line, it has no respect of your Ichimoku, Fibonacci zones, all these things, they're distractions. And if people will just strip their charts down and look for periods of where the real actual orders are, because price isn't going to go up based on the list of things that we have on our platform. Indicators aren't going to do it. What makes the market move is the
How about ever try and use a magnet on your screen?
A magnet?
Yeah, you put a magnet and drag it in the direction you want the candle to go.
Yeah, there you go. The purpose I think that the benefit rather of having an indicator is to see what the multitude are expecting, and I kind of like use it as a sentiment gauge. So if I see a lot of ideas that would be viewed in the indicator realm, suggesting that price would be internalized as bullish, and I'm looking for an area below the market, for instance, like these equal lows here. Okay.
Yeah.
I have that on my notes as if we have a deeper retracement and we lose this level here.
Yeah.
Okay. This down close candle, to me, and by my definition, this is what I call a bullish order block. What makes it a bullish order block is because we had a nice expansion, displacement of price,
right,
and it took out a high. Now, even though this was my initial target, I'm not trying to pick the top. Okay, and I'm going to give you something today for your viewers so you can study and go back and see if I'm giving you anything of any value, and also you can kind of test it going forward. The things I talked about last time we were discussing live with the markets in February, I gave you some scenarios of what I was anticipating here. Obviously, the run above here and return back to this low here. It's not standard support resistance I'm focusing on. I'm focusing on the liquidity that rested above here. And you asked me what would negate certain things. I counsel you to go back and look at that video because the things I kind of outlined is happened already. So I'm going to give you another sample of what I think is going to happen going forward for the next couple months, and we'll see if I'm right again. But
okay,
I gave you some criteria about if the market was able to stay above this low here. I'm sorry, not that low, this candle here. What I was basing that on was the order block, which is this last down close candle. Okay, so if it stays above that, it's respecting that. That means the institutions that bought here, that broke this high here. Now remember, go back and watch that video because I was suggesting that price was going to sweep here. Now, I did not know if it was going to have a long-term move up because the conditions weren't there yet. The conditions were, as I'm going to outline here, so you can kind of use it going forward the next couple months as well. The liquidity that was ran above here, we see that. That's a break in market structure. This was after our meeting. So when market repriced down to this level here, there's our bullish order block. In this realm here, I'm going to pull up something that my students are familiar with. It's what I refer to as SMT, which is kind of like a quirky little name for smart money technique or smart money tool. All it is
like it.
blending. Again, it's going to look like indicators. Once I put it on the chart, it's going to look like, oh, wow, he does use indicators. And I use four indicators. It's the open, the high, the low, and the close. I look at how the markets go through a period of accumulation and distribution. I don't need a MACD to do it. I don't need a stochastic to do it. And none of your viewers, and neither do you. You don't need any of these things. If you know what you're looking for and you blend time and price theory. Time is obviously, with Forex, we're very susceptible to fluctuations and increased amount of volatility volume.
Not being patient.
Well, not so much that. What I'm trying to draw the allusion to is there's no other market that is more time sensitive, in my opinion, than Forex. I mean, you can set your clock to some of the things that are very generic with price action. Like there's certain things that have a high probability to create a higher low in the week on specific days if certain criteria are there. Now, without going into all that, because I could literally talk to you for 24 hours and not even scratch the surface on that. But what I want to give you is something to go away with, and your readers and watchers to go through their charts and kind of like get excited about looking at their charts naked. Because it feels smart, it feels intellectual, and I used to do the same stuff, having all these things on our chart, but it's a distraction from really what price is trying to tell you. If you just focus on price itself, it'll give you all the insights that you would ever need and never have to look for that little indicator drop-down tab on your platform. You don't need any of those things. As soon as you start putting things on there, you're trying to justify reasons for price doing one thing or the other. And when you're not right, you're left feeling demoralized because now you're left with, okay, does my indicator work or did I read it wrong? And neither one of those things are the real thing. It's that you're not watching price action. Price is telling you everything there is. It's giving you sentiment readings. It's giving you a directional bias. In fact, in the first couple minutes of me talking today, I've already taught you how to get the directional bias. If you look at your daily chart, find equal highs and equal lows, Wherever that is in recent time and it has not traded there, chances are you got about a 70% probability it's going to go to that level. Why would it go there? Because that's where real orders are. I ask myself this simple question every single day when I sit down in front of my charts. Who's in the market right now making money? Where's their stop? That's the initial first draw on liquidity. And that's going to go by previous day's highs and lows. If yesterday was a bullish day, I know that there's going to be a large liquidity pool, which is basically another nickname for an area of stops. If yesterday was a bullish day, where's their stops going to be? Below yesterday's low. And yesterday's low, I'm sorry, if yesterday's close was low, or if we had a down close day, then I know that the previous day's high, there's going to be a liquidity pool resting above that. So as a day trader or as a scalper, right away, you have something to go with and go into your charts and start studying that, previous day's highs and lows. So it's the first thing I taught on baby bets back in 2010. A lot of people discounted it, thought it was just small, it's nothing of value, any value, but people that sit down with it and formulated trading plans off of it, they know exactly what they're doing day to day, just based on that simple little theory. And it took no indicators except for the open, the high, low, and close. Now, getting back to what's going on right now, because I kind of want to bring that, because I could talk and talk and talk and never really come to anything that goes forward. Last time I gave you an understanding of imbalances and what I felt was the most recent draw on liquidity, which was this high here, that we would try to reach up to this high, and then I don't know if it's going to break below this low. At the time, I was bearish because I didn't want to pick the bottom. The folks that follow me know that I changed gears in here and went bullish, and we were identifying initially these equal highs. See how clean they are? Okay, right above that would be resting buy stops. Why would there be buy stops there? For people that have already went long, I'm sorry, not long, went short, to protect their short position, they're going to be having a buy stop here. Now, right away, retail traders are not going to see that as viable. It doesn't make any sense. Why would someone have a buy stop up here protecting a short that's already moved this far? Large funds do that. They have to have a certain measure of criteria where they allow the market to move, okay, and they have deeper pockets. They're not over leveraging their accounts like most retail traders are, and they can weather a pretty sizable retracement because they don't have the precision element on their side. They have a long-term macro view, and they are allowing these price cycles to move and gyrate around, and they have to give themselves a lot more room. Maybe they had some stops that were lowered to here, or maybe they lowered it to here. That's not my argument. My argument is you want to look for where there's periods of equal highs and equal lows, and initially ours was here, and then it was here, okay? What I want you to focus going forward, and what I was looking for that wasn't in the charts yet, and I'll do that now, I look for an element of divergence. Everyone, I think, is aware of trading indicators. They know what divergence is. Price makes a higher high, but whatever indicator they use for measuring momentum fails to make a higher high, okay? And that's a simple understanding. And if you don't know what divergence is, a simple little Google search on it, and you'll know what it is right away if you're new. But if we look at the element of the dollar against, for instance, the euro, okay, and I'll take this off for a second. What I want to draw your attention to is the fact that we made a lower low here. Now, at the time of our discussion last time, it had already done this, but because I don't try to pick the very bottoms and I don't try to pick the tops, I wait for price to give me more insight. I'm going to teach you what I was looking for, and that way you can go forward and do the same thing going over the next couple of months. Because I think the same thing's going to happen. But this lower low here, okay, relative to this low here, in the dollar was not met with a higher high in the euro. Now, in classic understanding of market dynamics, if the dollar goes lower, foreign currency should rally, and if the dollar should go higher, foreign currency should go lower. It's like this teeter-totter effect.
So that was the divergence. The euro was not confirming the Dixie move.
Yes,
and that was your market tell.
Yes, that was my indication to watch for that run above that old high back here. Okay, because if it did that, what it's basically telling me is it's showing a willingness to break market structure, but I still would require more things. I'm going to teach you that, and it has something to do with these blue lines here in a minute. But the fact that the euro dollar was unable to make a higher high, what that's showing is it's a crack in correlation. Correlation is something that shifts in and out of the marketplace, and again, this goes in a deeper thought that you can't just teach in one discussion. But if you look at specific times of the year, specific times of certain months, certain days of the week. There's seasonality. There's tendencies for these things to repeat. Markets are not random. Okay, there's a lot of cyclical, generic traits and characteristics that.
Are you? Let me ask you, Michael. Are you a believer in turnaround Tuesday phenomena?
Oh, actually, yeah. I'm. If you look at the statistics, it's undeniable.
Okay. Because some people make fun of me when I bring up turnaround Tuesday.
Absolutely.
And I've had, I've said, Friday usually get follow through into Sunday, Monday, and usually your best reversal day is Tuesday, Wednesday, Thursday, but Tuesday being the preferred one. Yeah.
Yeah.
Okay.
Yeah, it's definitely something. Usually the people that make fun of it are the ones that are very highly indoctrinated in the one study or one approach, and they feel like they've conquered the world. I had that same problem too when I first started. They think they know everything. I thought I knew everything too, and then I realized I didn't know anything. But the lower low in the dollar, okay, the lower low in the dollar that was not met with the higher high that would normally be expected in the euro. If you're looking for indicators, if you start looking at price like this, especially for Forex, now it does the same thing with commodities. You can do the same thing with stocks. You can do all these types of things. But if you are specifically looking at trading currencies, this is one of the biggest insights that you're going to get in terms of understanding price action without the requirement of having an indicator. But you can feel satisfied that you have an indicator of some sorts because you're looking at a line. All this is the euro dollar plotted as a line chart. Now,
yeah, Mike, there is a kind of a recent example too. NASDAQ 100 made new all-time highs last week, and the semiconductors peaked a month ago.
Right.
And they used to be the leadership. So NASDAQ making new highs without the semis is a message on NASDAQ.
Absolutely.
Yeah, okay. Go ahead.
If you look at what other pair would be inversely correlated or a mirror image of the dollar that's closely correlated to the euro, which one would that be?
Swiss?
Well, not so much because that's actually.
It used to be. So what is it? Yen?
Well, it would be cable.
Okay. So I learned.
Maybe I asked it wrong. Maybe threw you off. But if we include the British pound, if you remember, go back in our last discussion in February, you asked me about cable, and I said that cable was going to run its high, and it did.
Yeah.
That's that higher high. I said we were going to run this high. It did. Look closely. I'm not going to say anything right away, but do you see anything between the two charts at the top, the red being the euro dollar, I guess the yellow or orange being the cable?
Yeah, cable confirmed and the euro did not.
Now look closer. Look what's going on here. See this move here? It had a higher low in the dollar. Cable made a higher high, which I already told you that back here was going to happen. It was going to run this high here. Yeah. Running that high was kind of like a false break. We already had the insights that it could have happened earlier than that, but it took this much time to get to it. This was the confirming factor I was looking for, because not only did the euro fail to make a higher high, the cable did make a higher high, but look what was going on with the dollar.
Gave it back in a hurry. It was like a false breakout is what you're saying, over that 10% line.
Accumulation. The storyline behind it all is that the dollar was being a massive accumulation. It had already got the warning sign back here, but this is what I was looking for. Now, what was the driving factor behind me anticipating the move up to these equal highs and up to these equal highs here when it was in this area here? Seasonal tendencies. Okay, there's a seasonal tendency for the dollar index to move a prolonged period of time in the spring and then moving lower generally July into October. Now, I don't want you to just take that, if you're a new listener, if you're a new trader, don't just get in there and say, oh, well, he said it's going to do this every year, so therefore I'm going to do it. No, you have to look at some things in price action to kind of like further validate those things. So I'm going to take these off because I think I've already made that point. If you look at the time between July and October, or September rather, going into end of September going into October, there's a very large seasonal tendency. If you go back over, I've been looking at data since the 80s, and if you look at it, there's a large seasonal tendency, or high probability, I should say it that way, for the dollar to go lower.
Yeah, 2017 bears that out.
Mm-hmm. Now, I can go back and show you the last 5 years, but I'm asking you all that are listening to go back and look at your charts too. There's going to be 2 times over the last 5 or so years where it does not do it. Actually, there's 1 year where it really rallies up, but if you look at the long-term charts, it should have never went lower anyway because it had been moving lower for a long period of time. But seasonal tendencies are not panacea. They're not a be-all, end-all. They are not you hang your hat on and say
another tool.
Exactly. So it gives you a roadmap. So what I like to do is I look for periods where the market has a seasonal tendency for it to move, and one of the seasonal tendencies is for the dollar to rally in April, May time period. And then what happens again, we shift gears around July. So what does that give us? It gives us a roadmap every year to anticipate bullishness on the dollar, but the technicals have to line up too. So what are those technicals? The things I just showed you how to measure real accumulation, real distribution. If we can see that in the correlations between like markets, for instance, we've discussed the teeter-totter effect, where the dollar goes up, foreign currencies bend the knee and go lower. If the dollar goes down, foreign currencies are allowed to rally up. If we see that cracking correlation where there's a move that's met with a higher high in one and not the other in a reverse sense, in other words, higher highs should be seen with lower lows in foreign currency. Dollar going higher, lower should be seen with foreign currency. All you're doing is reversing or comparing the extremes. If you do not see that, agree. What you're seeing is a cracking correlation, and the only way that would happen, and the only reason why it would happen, is there's such a large volume of accumulation or buying or selling that it has to manifest itself in price. This is the reason why I tell everyone I don't fear teaching what I do, because it's not going to stop. It's going to work forever, because greed is what it is. Banks are not in the business. Large institutions, large prop firms, all these companies, their volume is such a huge volume. It's people don't understand how much money really goes through these markets, but their orders are not small. They're not tiny. They're very big, and they have to be broken up over blocks. Sometimes they're very vast. Because of that, it creates cracks in normalized market conditions. That means that market will not go higher if it's under a heavy measure of distribution. It's not supply and demand. It's not indicator based. It's all based on liquidity. We can measure real buying and selling with what I just showed you today. And now by having the component of seasonal tendencies, you can sit back and literally wait. Certain periods of the year, you know you should be hunting a specific criteria or a direction or a setup. Now, once these setups take place, it doesn't matter if you're a long, I'm not a long-term trader. I can't trade, and hold for months. I tried it. I did it a couple times, maybe couple, not consistently, because my mental capacity for holding something long-term doesn't gel with me. I don't have the psyche for that. I'm a short-term day trader or short-term trader. But what I use this information is when I have these long-term prolonged moves.
It gives you the bias, what side of the market you want to trade.
Exactly. So I can work intraday, or I can work with a weekly range and trade with that insight. So I'm not trying to be a long-term trader or force myself to do something. I'm just using the long-term insights to play off of.
Well, another great interview, buddy. Now, you're not the easiest guy to follow and get a hold of. If people want to follow you on Twitter, you have to vet them. You get a pending button. So what do? People request to follow you, and then you qualify them to see if you'll let them?
There's no qualification. I just like to see if actually watch it.
I didn't know if they had to be credited investors or anything like that. And do you have a website? I don't recall.
I do.
Yeah. Okay. So maybe you could show it.
Well, it's theinnercircletrader.com. It's free. It's a free forum. Folks can go and watch all my tutorials. And there's some things in there that I'll be adding to over the remainder of this year that are free, that you guys can go in there and just tinker around with it, watch. And there's a lot of things that you'll be challenged by, things that aren't really talked about.
You make people think, Michael. I like that. You're trying to give them a way to look at the jigsaw puzzle and put the pieces together and have be able to read markets, not just one candle.
Right.
So you're a natural teacher. You're a great guest, and I really appreciate you joining us for a return visit to FACE, and may pips rain down on you and your mentees till we meet again.
Thank you very much, sir. It's been a pleasure.
Okay, everyone, that's Michael Huddleston. You could find him on Twitter at I_am_ICT, or go to his website. And that's a wrap. I'll see everyone for Turnaround Tuesday. Good hunting. And remember, don't just count your pips, count your blessings. Adios, everyone. See you tomorrow. Enjoy the rest of your day. Thanks again, Mike.